Good evening, good evening, good evening, good evening, everybody. How y'all doing, man? How is everybody doing this evening? How did I get back over there? Get over here. What's going on, everybody? What's going on, everybody? Good evening, good evening, good evening. Jolly pies for the late start. I was outside taking care of some etching away at that old honey-do list. I was just chipping away at that honey-do list. I went out there today, went to Home Depot and bought some gutters, some new gutters. And I got up there and was taking down like the remaining section that I hadn't taken down when I was replacing the soffit and the fascia board. And when I took down the remaining portion over there, found more rotten soffit. I mean, fascia board, found more rotten fascia board. There was some rotten soffit too, but I said, I'm not replacing this soffit on this corner because it's got like cameras connected to that corner and I would have to take it down. I said, no, that little bit of rot gonna stay there. But I replaced the fascia boards over there. So I had to, it was made way more work than I expected for this afternoon. So I was tired. So I didn't get in here at 6. But we here now. That ain't why y'all came. Good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lay Rogers Sr., aka Aranya Grande. We don't have a background, but Big Spider ain't never far. Always right there, hanging out with us. And you are now in tune to another episode of the Intraday Price Action Recap. And this edition of the Intraday Price Action Recap being brought to you by Conquering the Aging Session. We have 6 slots left. If you would like to participate, it will be on sale until April 30th or until the 6 slots are gone. The link in the description below is the public link. If you're in the gang, your link is in the Discord, in the announcement section. The price for non-gang members is $250. The price for the gang is $100. There's only 6 slots left. Take advantage. Take advantage while you can. We are going to conquer the Asian session together. Hey, man. I didn't get an opportunity to really like watch the market a lot today. I was sort of busy most of the day. And so I didn't get a chance to really watch the market. But I will ask, did the market do anything that caught somebody by surprise today? Does someone have like a question or like, hey Tim, can you help clarify this? Like, hey, what's your take on this? I expected this and price did that. Like, what's your take on? Does anyone have any questions? I don't even have my trading view open. Let me open that. Does anyone have any questions for me before we get underway? Before we get underway.
Hi, Tim. I didn't trade today, but just looking at price on the 1 hour, it looks like we retraced back into that uh busy as expected, probably 50%.
Let me share my screen.
But I am on ES. I'm sorry. I presume
Yes.
NQ might be the same.
Yes. All right. Let's go.
Micro ES.
Right. You said the 1 hour. Okay. And you said what now? We retrace back into this Bissy here. This 1 p.m. Bissy from 4/9.
Yes, sir.
Okay. All right. You say price retrace back into that.
I didn't mark it, but I think we reached consequent encroachment,
Yes.
or is it? I always get confused. Mean threshold or consequent encroachment.
Consequent encroachment is on imbalances. Mean threshold is on reference points like blocks, like order blocks, breaker blocks,
Ah,
negative
okay.
blocks. Yes, it's all 50%, but it's different types of 50%. So if it's an imbalance, like a gap, a wick, a void, it's consequent encroachment. If it's a block, it's mean threshold. If it's a range, it's equilibrium, like a dealing range, right? It's equilibrium. Consolidation is equilibrium, right? If it's a range, it's equilibrium. Gap inefficiencies, consequent encroachment, blocks, mean threshold. Okay. Yes, we came down there. Yes, today. Wait, drop below consequent encroachment. Drop below. This is consequent encroachment right there. Went below consequent encroachment, closed back above it, right? Respecting consequent encroachment with all of these hourly candles. Okay. All right. Go ahead.
And that's all I noticed, and that we might be retracing back. I hadn't measured the dealing range yet, but I think on the lower time frames, I probably have to look at that to see if we took out both sell side and buy side.
Okay. So right, right now, this is your current dealing range here, right? You're focusing on this portion of it there, right? Because that's our last displacement leg on it. So this is your dealing range. And right now we're focusing on right this portion of the dealing range. And we have moved back into a discount coming down into consequent encroachment there, right? And we're respecting the respecting the came down to consequent encroachment of the inversion fair value gap. Uh, 60 minute, right? And what does Michael teach, right? About when you trade in breakers, right? If there's an inversion fair value gap inside the leg of the breaker there, right? you know, we can expect price to come down to that inversion fair value gap. Right. It came to consequent encroachment of that inverse fair value gap, then pushed back up. Right. And then on the bearish side, right, we have our dealing range there. And then we're focusing on this piece of it here, right? Because you came down, right? Expanded down, traded back up inside, came down there, right? So now on the bearish side, this is the portion of the dealing range that price is active in here. And we've traded back up to a premium, and we've created an inversion fair value gap there. And now we're just consolidating in the premium of, of that inversion fair value gap, right? Consolidating above consequent encroachment of this inversion fair value gap here, right there.
Okay, so since we're consolidating, does that mean using that 1 hour higher time frame that do we have to balance, I mean, reclaim that inversion fair value gap? Is that, I guess we don't know what time that will happen, but would that be more efficient price delivery to now that we're gone into a premium to expect price to come back to that previous SIBI, I guess now in inversion fair value gap, essentially. Yes, to take out that sell side.
You talk about come back down here to take out that sell side?
Yes. We just have to wait or and see what price does.
Yeah, because we're like in the middle of the road right now. Because if you look at the overall dealing range that brought us down to here, right, we're in the middle of the road. See, right there, to right there, we're smack dab in the middle. So price can go either way right now. You don't want to try to pick what it wants to do. You want to show you what it wants to do. And so, and at that point, at this point, you just map out the bullish and the bearish narrative, and whichever one the algorithm tips its hand to want to do, then that's when you go in and start participating. Because right now we're just right in the middle of the road, right? Because this right here is the dealing range that brought us all the way down to the low, right? And now we've had a bullish break in market structure, but we're just chilling right here at 50%, right? On this hourly time frame, we got a bullish break in market structure. So what you want to do, you want to go up, right? Go up to a daily, right? That's 2 time frames up, and say, okay, did the daily have a reason to come up there and give us a bullish break in market structure? Yes, it did. It had a fair value gap there, right? It traded up to that fair value gap. So since the daily had a reason to come up there, right? That bullish break in market structure doesn't make you just say, hey, we're going to blast off to this high. Right now, if there is no reason for the daily to come up here, then you'd be like, ain't no reason to come up there besides that high right there. Right. So now, and so it's just so because right now it's in a sale program. Like overall, it's in a sale program right now. Right. And so based off of this dealing range right there, we've just come back up to a premium somewhere to continue to sell. Right. But we're sitting here at equilibrium, so price can go either way, right? Because we're at equilibrium, we're at fair value. We don't try to, you know what I'm saying, the time to be shortened was up here, the time to be going long was down here. This is the time where if you're not in a position, you just sit on your hands and wait until price moves in a direction, right? So yeah, that's where you are there. So like I said, this is the bullish dealing range. We came down to a discount, right? Came down to a discount, pushed back up, right? And then this is the bearish dealing range there. Right, this is the portion that you're focusing on. We came down and we retraced back up to a premium, and now we're hanging out right on top of consequent encroachment of the dealing range and hanging out right on top of this just create this inversion fair value gap, and we're sitting there on top of the inversion fair value gap, right? Engineering a lot of liquidity up here in the premium of this inversion fair value gap, right? So in the sense of um, bearish sentiment, right? The way I like to see price action move would be a sweep of that high and then start to tank, right? Because we're engineering liquidity, right? So sweep that high and then drop, right? Why do I want to see it sweep a high? Because we've come down, right? We've come down here, right? This was our initial dealing range there, right? We went up to equilibrium, right? Because this right here was efficiently delivered, right? Came back up to equilibrium in a premium, right? Based off of this portion of the dealing range. And then we took out the sell side, right? Once we took out the sell side, right? And we've expanded out. Now I would like to see some type of manipulation of buy side because sell side has been taken, right? And since we're engineering liquidity here, right, I would like to see a sweep of that and then start to drop, right? We could come up and sweep that one there, but if it's, exceedingly bearish, I don't want to see it retracing a whole lot. I don't like big retracements. That's high resistance, right? So just sweep that liquidity. Sweep that liquidity and then start to drop down, right? And come and take out the sell side. But if if price wants to continue the bullishness from here, right? We've dropped down here, right? And wicked back up. Then we came down and didn't take out that low. And now we're engineering liquidity. So I would just like to see a sweep of some short-term sell side, like maybe take out that low there, right? And then start to move up, right? But take out that low and then displace, right? So if it takes out that low, then displace, creating fair value gaps, right? And take out buy side, then okay, we showing signs of wanting to continue up. So that's how you want to look at both sides, see which one the algorithm offer, and then execute. Right? You always, if you're sitting at equilibrium, right? Because you see we're at equilibrium of the overall dealing range from here, the one that took us all the way down to the low. We're at equilibrium of this latest dealing range right here, right? So, what I'm saying? The algorithm is right at equilibrium, right? We're at equilibrium on the most current price leg inside this dealing range right here, right? This price leg inside this dealing range, we're hovering right at equilibrium. The overall, we're right at equilibrium. So it's right there. It can go either way. All right. What else you got for me? All right. Take that as a nothing.
Thank you.
You're welcome. Anybody else got anything? Anybody else got anything? Yeah. I said, anybody else got anything? And the NQ do look pretty much just like the ES. The charts look very similar, right? Hourly busy, hourly inversion fair value gap. Uh, it didn't create an inversion fair value gap here, what the ES did. didn't create an inversion fair value gap, but the ES did. So they do look very, very similar. All right, y'all. Let's pop up and see where we at. The weekly, like we said, I think it was Monday. We had traded all the way back up into that March 24th weekly candle, right? So eliminating the possibility of creating a SIBI, because last week, the March 31st weekly candle, we closed down here, leaving us with a possibility of making a SIBI that big. Right? This week, we've traded up and traded back into that March 24th weekly candle. So now there's no possibility of creating a SIBI right here. Right? So watching this right here to see if this acts as an immediate rebalance, meaning that price stays heavy and continues down and attacks the sell side liquidity. Right here, it was like price acting like it's in a beeline to get to that sell side right there, right? Or if excuse me, or if price is just efficiently delivering this area to start a march back up, right? So watching that right now. Right now, the sale program is intact on the weekly, right? The sale program is intact on the weekly. At this point, the weekly is no longer showing any bullish signatures. When we was talking before, like when we was talking before in previous weeks, right? When we was like over here, the weekly was the sale program was intact, but it was showing bullish signatures, right? It was showing bullish signatures. And once we retrace back up into that fair value gap, it dropped, right? That's what we talked about. This is a breakaway gap. This was the measuring gap. And if that was the measuring gap, the price was going to bring us there, right? And we had already spoke about this fair value gap here. Its job was to take us there. And if this was going to be a true measuring gap, then the destination was here, right? And we blew right through all of that with that weekly candle. Dropped down and went just below equilibrium of the overall dealing range with the low created back in October 2022 and the high created in December 2024. Right? Dropped all the way down to equilibrium. This week, we have again traded back up and traded down into a weekly BISI and bullish order block. Right. Traded down just below consequent encroachment of the weekly BISI and into that bullish order block right there. Touched it, got out of there. Right? Went to consequent encroachment, got out of there. Right? Went up. Now, tomorrow's the last day of the week, so we look unless we just super tank, right? We're going to be respecting that weekly BISI that we traded down to, right? Respecting the weekly BISI, respecting. We got a breaker here. You got a mitigation block there, right? So we come here, high, high, low, high, lower, low, high, right? So you got a breaker and a mitigation block right there on top of each other. I can't remember what ICT used to call that. That was like a setup that was all the rage in England at once upon a time when you had a mitigation block and a breaker embedded inside each other there, right? That was like that was a setup that was like all the rage in England. Everybody was looking for that. I can't remember what the name of it was, but man, that was like that people talked about that more than they talked about the silver bullet or the 2022 model or anything Michael dropped, people just go crazy with it. Like right now, all I hear people talk about is Venom. I don't even know what Venom is, but I just every time I'm in somebody's chat, I see somebody talk about, oh, that's the Venom model. Oh, that's the Venom model. Oh my God. Shiny object syndrome. I digress. All right. Same thing on the NQ that we talked about with the ES. The NQ came back up to the imbalances that was in this portion of that dealer range, right? This high, this low. Right. That's the portion there. Came back up into a bearish order block, repricing all of these imbalances. 1, 2, 3 SIBIs. Yesterday we came up, created inversion fair value gaps for them all. Today we traded back down into the wick of this April 8th candle. Just like we talked about before with the looking to see if it's immediate rebalance, looking to see if this acts as an immediate rebalance. If that is going to act as immediate rebalance, you would want to see price get up out of here, taking out at least that high, and maybe even that one. Taking out that high, right, will give you this high right here, will give you a bullish breaking market structure on the daily. But I think this would give you one on the weekly. Let's check that. And it would. That would give you one on the weekly. That'll give you a weekly bullish breaking market structure. Okay. So hit the bullish order block in the premium of this portion of the dealing range, this price leg there, hit the order block, pull it back down into the wick of the 4-8 candle, right? If you look at that right there, we came down just below consequent encroachment of the wick. Right? Came down to consequent encroachment of that wick there. Okay. Now, again, looking to see if this is going to act as an immediate rebalance. What do we have below to support price? We got consequent encroachment of that wick, right? And then you got some sell side right there. That's like lower time frame sell side, right? When I'm looking at the daily low, there's intraday sell side resting below a daily low, right? So it's not sell side in the sense of on the daily time frame. It's sell side in the sense of intraday price action. So if you're looking for this to act as immediate rebalance, want to come back into a discount, got a discount PD array right there, consequent encroachment of this wick. There's no other discount PD arrays there on the daily, right? Only thing else you got there is intraday sell side below that low, right? You want to see an attack of that and then a swift move away, right? You'll be looking for a swift move away. Couple reasons why just really one reason why I said this high, preferably that one, is because all of this, right, has been efficiently delivered, right? All of that has been efficiently delivered, right? Consolidating, offering buy side and sell side, offered buy side, offered sell side, right? Left that range, right? Traded back up into it there, left that range. Okay, so now all of this is a balanced price range. Offered sell side, offered buy side, came back down, left that area there, right? So all of this is efficiently delivered, right? Buy side for that sell side, So now all of this, everything over there has been officially delivered, right? Now we're retracing back down, traded into that wick, into that consequent encroachment. So now there's no, this is the only inefficiency left there before getting to that order block, right? So it only reason to come down is to come into the discount PD array or take the liquidity, all right, to continue up, right? To continue up. We have come to the point to sell down, right? This was the point to sell. And price, once it started going, it stopped, right? It stopped. So either that right there is just a pause to fake people out, right? Or prices being supported and it wants to hang out here or go back up. Because, like I said, we came down, expanded down, hit a discount PD array, right? Traded back up into the premium. And when we dropped down, just stopped, right? Just stopped for no reason at all on this daily time frame. Let's go down to 60 minutes. Well, we'll look at 4 hour. We'll look at 4 hour. On the 4 hour chart, right? We came all the way back up to the highest imbalance that we got on the rundown. Okay. Came up above consequent encroachment, right? Dropped down, traded all the way back down into a discount of this move here. It looks to be a discount. Let me check my calibrated eye. Yep. Came all the way down into a discount of that move there into the order. This order block, the bullish order block, and the bullish mitigation block into the 4 hour BISI. Reject back up. Right, rejected back up, and now we've opened up, and that's that discount wick there at the low end of this 4 hour CIBI, right? Came down, respecting that CIBI. That's also this portion right here where this CIBI and this BISI overlap, which would be from consequent encroachment. Be from consequent encroachment of that CIBI through there. All of that right there. Right. So all of this is efficiently delivered. Leave that area, right? Balance price range down here. And then we got this portion of the CB and the BC overlapping. So now all of this here is a balanced price range, right? Because we left that area. Right. So now we've traded back down into, and then all of the bodies thus far is respecting the highs of that balanced price range. And again, just sitting in the middle of the road. Just sitting in the middle of the road, just like the ES. Sitting in the middle of the road right there. Just like the ES, price can go either way. Pretty much same thing on the 60-minute. Get dropped down to the 15-minute. Then we're gonna look at the intraday price action. We opened up here last night at it was a bearish new day opening gap. We got down a little bit, opened up at 19,266 at 3/4. Hung out there for a while. for. I don't know what I was marking. What that I was marking. I don't know what that was. Oh well. Delete it. Oh, excuse me. So hung out there and knew the opening gap up until like 8:15, and we dropped down below the short-term sell side, traded back up into the 8:15 SIBI that was created on the drop down on the 9 o'clock candle, traded down again, taking out the short-term sell side, retraced back up into the 9:15 SIBI. Trace back up to the 9:15 SIBI, drop down again, taking out the short-term sell side. And then as we went into midnight, started to displace back up, trading back up to the high of the new day opening gap from the third. That dropped down from 10:15 up until 11:30. We went from the high down to below the low of that same new day opening gap from April the 3rd. Then going to midnight, right? I had marked out the high and the low. That's the opening range prices for midnight, right? The lowest low and the highest high between 12 and 12:30. We took that out, traded back down roughly to like equilibrium of that range. Then we displaced up, trading all the way up to the high of that new day opening gap, right? Coming real close to the rejection block. Poked it to the rejection block, traded back down. Almost creating an immediate rebalance. Traded down into the 130 candle. And then we moved up, taking out the buy side. And did we set relative equal highs or did we take them? Let's see. Set relative equal highs, did not take the high, right? On that 3M candle when the London opened. Right? Set relative equal highs, did not take the high. And then we displaced down, right? Displaced away. Breakaway gap. Breakaway gap. Then form fair value gap there on the 330 candle right there. Right, 330 candle right there. We when we went up, took out that buy side. Right, we came up, consolidated here in the premium of that open new day opening gap. Right, in the premium of that new day opening gap, trading there. Then here at 3 o'clock, we traded up, took out the buy side, set relative equal highs, and then displaced away, right? Trading down through all of this efficiently delivered area, straight out, creating that SIBI as we broke structure, right? Then once we traded down, took out that sell side, traded back up into the fair value gap there, right? On the 630 candle, traded down right here, created an inversion fair value gap, right? Then start to drop, came down below the bodies on the 830 news candle, right? Came all the way back up, took out the short-term buy side, created relative equal highs, then dropped all the way down, moved back up into the inefficiency for real this time. We actually traded up to it there, right? And then we traded back up to it one more time. A lot of back and forth overlap, like high resistance, like doing that, because this right here is a news candle. Boom. That's just for manipulation. All right. And then on this 9 o'clock candle, we trade up into the inefficiency with real trading moving, right? Then on this 9:15 candle, we went back up again, Same inefficiency, just taking out that high, right? Then on the 930 candle, we trade up above consequent encroachment of this wick, right? Just unnecessary reaching, right? Same thing here. 945 candle, trade all the way back up above consequent encroachment of that 930 candle, right? But slowly making our way down, taking out the sell side. Once the sell side is taken out here, going into the 10 o'clock hour, right? 10 o'clock macro time, we trade back up, coming all the way back up into the bearish order block there on the 1030 candle, and then drop it like it's hot, right? Just melt it off most expeditiously, right? Had one little retracement there to the bearish order block there, displaced away, breakaway gap, right? Displaced away, breakaway gap, small fair value gap there, small fair value gap there, fair value gap there, finally reaching all the way down. Reaching all the way down there inside that large BISI. That's a 1 hour BISI, 15-minute BISI, 4-hour BISI, right? All this right here is from yesterday when the president talked about halting tariffs and the market went to the moon, right? Trading back, retracing back inside that blast off there. Move back up into the bearish order block over there from 10:15, 10:30, and have just been hanging out right there for the rest of the day. Right there, like we said, at equilibrium. Does anyone have anything for me? If anybody wondering what these buy side and sell side is on there, I said what this was. This was the opening range for the true day. Then this one here is the opening range for the New York AM session. That's why I said buy side liquidity AM OR for opening range, sell side liquidity AM OR for opening range. So that right there is your highest high and your lowest low that was created between 9:30 and 10 o'clock. And this one over here is your highest high and lowest low created between 12 a.m. and 12:30 a.m. You see, when we took out sell side, we traded back up, boop, right there to that opening range low, back into that order block, respecting it beautifully with the closure on that candle right there, being at 18,616 and 3/4. And then if you look over here at the sell side, it's 18,658 even, right? And I looked at the wrong thing. Close on that is 18,655.50. Right? So it was just below that right there. Body's respecting it. Wick above it, body's respecting it, but it was just below that 60,658 even. Excuse me. And that is your price action recap. Do anybody have anything for me? Okay, I'll take that as a no. Take that as a no. Mad tired anyway. Again, link in the description for Conquer the Asian session. Link in the description for Conquer the Asian session. We're gonna do what we do. Hi, how have you been? I have been fine. What is the current bias? We're in the middle of the road, no bias. it's sitting right at equilibrium. No bias. I don't have any bias when it's sitting at equilibrium. Hey, I didn't say hello to y'all, man. I'm sorry, man. It's a link in the description for Conquer the Asian session. Anybody that wants to join it. Gang, your link is in the Discord. If you're not in the gang, the link is in the description. It's going to be a 2-week thing. It's going to be pre-recorded videos for you to go through at your own pace. I will have them recorded and posted, right? The official program kicks off on May the 12th, right? You're going to have videos to go through at your own pace, right? There'll probably be some pop-ups to answer any questions anybody may have, because when we get into the 12th through the 23rd, we're sprinting. Ain't no teaching then. What is the general win rate of the Asian session course? It's not a course. I don't have a course. I don't sell courses. I don't sell courses, and I don't track my win rate. I can care less about win rate. That's just something that people put on Al Gore's internet to try to dupe people into buying their courses. I don't sell courses. I'm not a teacher. I tell people, if you want to learn how to trade ICT, go look at ICT videos. They all on Al Gore's internet for free. I'm not a teacher. I'm just a guy that get on Al Gore's internet and I share my understanding of those concepts. And for some reason, people pull up and want to hear what I got to say. You're welcome. You're welcome. Hey. All right. There's nothing else. Diamond members. Tomorrow is Friday. So we will be doing tape reading at 9 a.m. 9 a.m. It's Don't Force It Friday. Excuse me. It's Don't Force It Friday. Right? It's Don't Force It Friday. If you've had a good week, hey, don't force it on Friday. If you had a bad week, don't force it on Friday. If you've done nothing all week, don't force it on Friday. Right? Gonna pull up. We're gonna read. We're gonna listen to what them Candals got to say to us. We're gonna have a good time. Who in here in the gang who not in the diamond chat? If you hear in the
Me?
Gang, me, Deborah, what you jumped off mute so quick for? If you're in the gang and you are not in a diamond tier, and you are here right now, put a 1 in. If you're in the gang, yeah. If you're in the gang, but you're not in the diamond tier, put a 1 in the chat right now, or say me, like Deborah did. Rhonda Green, Sarah, Deborah. All right. So Rhonda. Y'all know what song I'm whistling? Who can tell me what song I'm whistling?
Do it again.
Some of your whistles not whistling.
I know.
Fill it in.
My whistling.
It's
might
not
be
my phone. It's not
it
my
might
internet. It's
be
your
Your
whistle.
whistling breaking up.
it might be. Hold, let me get close to the mic. Hold on. Now I'm a whistle ain't whistling.
I told you you can't whistle. When the Saints come marching home.
Oh my God. Oh my God. Oh, do anybody know what? Cause y'all hear it that time?
A little bit. Do it one more time.
I ain't doing no more. My lips
Come
dry now.
on.
My lips dry now. Somebody said the theme song from the South. it's a song from the 80s. That's your clue. It's a song from the 80s. I'm gonna do it again. I know Sherwin gonna get it. Hold on. Let me drink some water. Mm. Oh my goodness. It's a song from the 80s.
Who's the artist?
D's. I ain't giving y'all that.
We ain't no D.
It was a group. It was a group. And all y'all fast behind little girls.
You're gonna have to hum it. Humming.
Let's see. What a group in the 80s. Let's see.
A
New
group in the 80s.
Edition.
Uh-huh.
Oh, Can You Stand the Rain?
Nope. I said
Nope.
in the 80s.
Oh. Weren't they in the 80s? Lord.
Can You Stand the Rain was like in the 90s.
Can you? Okay. Whew.
All right, I'll hum it.
The Commodores was the 70s or 60s.
I hum it.
All right.
All right. Mm, 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 mm. Mm, 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 mm. Oh my goodness. Y'all suck.
Man, we don't know what that is.
Somebody got a cheap cell phone. That must be Lump. That gotta be Lump.
Yeah, that's big on the stove right now. But we can't hear what you humming or whistling.
Oh, it's cutting out.
Yeah, it can't be all our phones. I think it might be you this time.
It might be the trunk gate. It'd be like trunk gate. It'd be cutting it. Let me listen. Let me hear what it sounds like. It might be the trunk gate. It'd be like trunk gate. It'd be cutting it. Let me listen. Let me hear what it sounds like. It might be the trunk gate. It'd be like trunk gate. It'd be cutting it. Let me listen. Let me hear what it sounds like. Oh yeah, it's cutting it off. It's cutting off the whistle. So I get it to y'all. The whistle cutting off.
So that's your bad internet.
Nah, it ain't the internet. It's the trunk gate pimping.
Okay, okay.
Let me see here.
Now what you was trying to whistle? Because we couldn't understand the whistle or the humming. You want to break out the keyboard, see if you can do it on the keyboard?
Fellas, there's a jealous girl in our town. Oh, baby. That's what I was humming. That's what I was whistling. Yolanda, she called the group off the rip. New Edition. And then gonna call out a 90s song. See, Sarah smiles always. That's you, Sarah? All right. Bust out the organ. Sarah smiles always. I know Rhonda. All right, let me do this right here. Love the baby. Love the baby. Details and copy link. So Sarah, send you a message. Paste that to you. Sarah, you have been invited to the tape reading session tomorrow morning. Rhonda Green. Rhonda, you have been invited to the tape reading session tomorrow. Where's Deborah? Rhonda said me. Sarah put a 1. Rhonda ain't even following instructions. I should take that back. I should take Rhonda invitation back. Deborah. Where's Deborah? Deborah, you have been invited to the tape reading session tomorrow.
Yeah,
Thank you.
You're welcome. That's it. 21. That's it. That's all I got.
Do something for me.
21 to do something for me. All right, that's it, man. That's all I got. I appreciate y'all for hanging out with me. Tomorrow is Don't Force It Friday. We're gonna be tape reading tomorrow at 9. Me and the Diamond group and the gang members that were invited because they were here and they unmuted really fast and said, I'm not a Diamond group. Right. Hopefully y'all got something out of this right here. Remember, we're in the middle of the road, so don't try to force any narrative. When prices sitting at equilibrium, right, it's starting to engineer liquidity. Do not become that liquidity. Take your time. Take your time and wait for price to tip its hand, right? Don't chase setups. Don't chase money. Don't chase price, right? Let it come to you. It's gonna come. It's gonna come. You may not trade 3, 4, 5 trades a day. You know what I'm saying? You may only trade 1 or 2 trades a week. But guess what? You're gonna have high quality trades, high quality, high yielding trades because you're waiting for that that cream de la cream or creme de la creme, as they say in France, right? What's up, Christy? What's going on? Christy D. I didn't say what's up to everybody. I'm sorry, y'all. What's up, Jim, Vernon, Charmaine, Lump, Jada, Deborah, Yolanda, Felicia, Kim, Rhonda, Green, Kashaya, Michelle, Tucker, Sage, Hemi Man, Ryu, you the Ryu from Street Fighter? Is that you? Are you the Ryu from Street Fighter? Hayuki. Wait a minute, which one? Was Ryu Hayuki? Did Ryu do? Or was that the other one? What was the one that did? What did Ryu make? What noise did Ryu make? And
I think Ryu did that Ryu. It was Ken and Ryu on there.
Ryu did the Hayuki.
I think so.
Hayuki.
Yeah.
Yeah. Yep. All right, y'all, man. I'll see y'all in the morning. And then if my house ain't done beat me down again, tomorrow afternoon, then I'll see the rest of y'all at 6 for the price action recap. If I don't, you ain't seen me since S2F days. Okay, then. I ain't gonna hold you, Christy. I don't remember Christy D. But what's happening? I ain't seen you in forever. Matter of fact, I talked to Kiki. Well, I ain't talked to. I text Kiki yesterday, checking on her baby. Me and Calandra had sent her baby some diapers, and Calandra sent her some kind of cream for herself, and I was just checking on her to see if she got the package and all that. Yeah, that was just yesterday. Text old Kiki. Yeah, that's it, man. I appreciate y'all. Yeah, she doing well. I appreciate y'all, man. I'll see y'all tomorrow at 9. Y'all enjoy the rest of y'all evening, man. I'm about to go sit on the couch and watch me a couple episodes of Godfather of Harlem and probably fall asleep to the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. Y'all be safe out them trading streets, man. Gone.